On board now, Kunal and Nooresh as well, and find out what they're making of the market texture right now. Kunal, hi, morning. Quite a day on close yesterday, but we gave up those morning gains. What is it that you're making of, the market construct right now?
Yeah, good morning. So I think whenever the indices get back into a zone where they start to underperform with respect to many of the other global peers, or we get into a range, don't sustain the intraday pops on the indices, that generally is an indication that the indices are getting into a zone of consolidation, and the larger part of the direction would be garnered by how the trends shape up across the globe. So what we've seen over the last 2-3 days is some sort of volatility which has come back again across the global markets, specifically the US indices, where you've seen Dow retracing by almost I think 900, 800, 900 points yesterday. So I believe on the back of it, you might probably expect that our markets would also remain to a range. Now, the critical support which you're looking out for comes back to that 25,000 mark, and there are two reasons for that. One is because of the strong psychological levels for 25,000 mark, and the second and most important is these points become good hub for traders who are looking at put writing. So closer to the 25,000 marks at 24,950 approximately could be acting as a critical support for the index over the very short term. So expecting the index to remain to a range, but 24,950, 25,000 should act as a major support for the indices.
All right, Nooresh, let's get in your take as well on the equity markets, given the fact that it continues to remain a very tempered session, the fact that you had the broader markets at life highs, what's that indicative of?
So the indications are there in terms of the momentum being strong. So if you have the mid cap index, the small cap index making new all-time highs, the trend is very clear. It's just that we are not seeing a strong move across the world after reaching the recent highs. And same way, the large cap basket in India has not been doing well in terms of momentum. So the bias remains positive. The stocks which are actually breaking out into new all-time highs and showing strong momentum have lower weights on the index. So whether it's the pharma or the IT names or oil and gas, they have lower weights. The banking space, as well as say Reliance or some of the other names which have higher weights, have not done well. So we are in a trending up move. It's just that the momentum is slow. So keep being more stock specific where the trends are strong.